What's going on, y'all? I am the Zoomer Value Investor. Welcome to my presentation. This is going to be a presentation on Tencent. This is a huge tech conglomerate out of China. If you haven't heard of them, you're going to hear from them at some point in your life. I'm going to get into them. I'm going to get into why I think they're an interesting investment opportunity today, why I think they could be a great compounder going forward. Really excited to get into this presentation. Go ahead and drop a subscribe, drop a like if you want to see more content like this. I do all types of due diligence videos, equity research all the time on this channel, as well as cover a lot of other topics pertinent to investing. So yeah, I went ahead and made this figure with help of the Luxurist on YouTube. He made a really interesting Tencent graphic, and I just kind of like expanded upon it. So listed right by each one of these companies, you can actually see the total ownership that Tencent has over that company. So I'm going to start here at this upper left quadrant, just kind of like breaking down them as a business. This is actually going to be the most significant quadrant in my opinion, because this quadrant is going to actually talk about like Tencent's kind of like inherent businesses. So you got WeChat up here, WeChat Pay, and WeBank. WeChat, you're looking at about 1.3 billion users worldwide. Obviously, most of those are going to be in China. But the thing that's really powerful about WeChat is it's not only like the communication engine of China, but it's also like the fintech engine, because you got to consider that WeChat Pay is a part of that, and that WeChat Pay is the most used essentially fintech outside of perhaps Alibaba Pay. It's the most used fintech. Now moving over here slightly to the right, you see Pinduoduo and JD. This could be Pinduoduo, I'm not certain. Now, why I don't have a percentage on these is because Chinese antitrust regulations and whatnot, they've actually had to liquidate, I know, at least some of their JD position recently. So I'm not certain on the actual ownership percentages they have of these companies, but I know that they've benefited greatly from wealth creation from these companies, that Tencent has benefited greatly from the wealth creation of, JD or Pinduoduo. And I know that JD, they did give a special dividend to shareholders when they did sell those JD shares because of antitrust reasons from the Chinese regulators. The Chinese antitrust are telling you, like, you have to sell these businesses, and they point to specifically the Chinese businesses. I'm going to get into this later, but Tencent's a worldwide investor. And I'm just saying, you notice how the Chinese antitrust asked Tencent to sell its Chinese businesses. They didn't say anything about selling its international businesses. More on that later, but I think you can probably put the one and two together why that is. This is actually going to be their most significant as far as like an investment holding. This is Meituan, I believe I'm saying that correctly. It's a significant Chinese finance. Over here you got a lot of exciting companies on this web. 12% total ownership in Snapchat. A small percent ownership in the N26, I believe that's a German bank. 20% ownership of Universal Music Group. 5% ownership of Tesla. This is going to be their most significant position today, with number 2 being Meituan. They have a 7.5% ownership of Spotify, 15% ownership of the EV maker NIO. You got 51% ownership of Tencent Music Entertainment. This is almost like a streamer, almost like a Spotify type platform in China. Has a lot of streaming, gets a lot of revenue through streaming, and has a lot of streaming rights on popular musics of the area. You have the Call of Duty mobile games. 5% ownership at Ubisoft, 5% ownership of Activision Blizzard, 82% ownership of the Supercell developers who do the Clash of Clans games, 40 to 50% ownership of Epic Games. I just went ahead and do a conservative low to 40% based on my research, but Epic Games, they did the Gears of War games in the past, and what's their most popular bread and butter now is Fortnite. Over here you got 100% ownership of Riot Games. Their bread and butter winner has been League of Legends. And you got 25% ownership of Sea Limited. This is a really popular southeastern kind of like gaming conglomerate that's been on the rise. Yeah, you just kind of take a look at this at a glance, you really see how diverse out this company is. It is almost like a Warren Buffett-esque conglomerate, but it almost is like it's a tech company. They really do focus on like tech type investments. So you can quantify the value of a lot of their investments if you really want to. I do want to really just mention that the way their business model does work is they continually keep investing their capital. It's almost like the Amazon Jeff Bezos kind of model with Tencent. So as they're acquiring revenue streams and whatnot, in half of a year, on average, do hundreds of investments, and only a few of those pan out. So we only really can talk about like the significant ones when it comes to Tencent. I believe you might have to read into like 10Ks or something of that nature, or it might not just be like public documentation when they're investing what starts as small sums of capital that grow into larger investments over time, such as a Tesla or a Meituan. But we're going to talk about what we know that they own today and what we know that they can still compound for them. For example, I believe that Tesla still would have room to compound for them. Meituan would still have room to compound for them. So we can quantify how valuable those holdings are today. And as well as, if you really want to, you can look at what those holdings would be worth at their all-time highs respectively. But let's just look at what they'd be worth today. So for a 5% ownership in Tesla, you're talking about a 860 billion market cap company. So that's going to be about a $43 billion net worth on that position. When you consider that Tencent is only a $390 billion market cap company, it's so significant to bring up that they are major shareholders in Tesla, because 43 out of 390 billion, I mean, that's a pretty significant number. That's a decent percentage right there. A decent percentage of the total valuation of Tencent, you could kind of quantify to their Tesla holding. And I feel like a lot of people just don't talk about Tencent as a Tesla shareholder. Now let's apply the same principle to Meituan over here at the right. You see it's a 1.14 trillion Hong Kong dollar company. That translates out to about $145 billion USD. So you take about 20% ownership, multiply that by the market cap of Meituan, you get a 29 billion net worth for this position that they hold in Meituan. Now you can apply that to any of those businesses that I've had over here. All you simply have to do is look up the market cap of the company and do the formula that I just mentioned, and that can probably help you like quantify your valuation of Tencent for your own self. Now I do want to mention, I believe Supercell's private, Epic Games is private, Riot Games is private. So there's a lot of these very significant companies with very significant cash streams that are actually still private under Tencent. So I think it'd be really hard to get like a market cap for these, but I certainly like Spotify, Snapchat, see like a lot of these companies you could do that same model for. So this is a chart from a few quarters ago. As you can see, certain things have happened, such as Meituan has dipped and Tesla has surpassed the valuation of, for example, like Tesla was 38 billion here, and on my model it was at least 43 billion. So Tesla's got up in net worth, as well as like Meituan's dipped and things of that nature. But at a glance, I just want to point this out. This is from a few quarters ago, so this is dated information, but a lot of the holdings are still the same. Tencent does hold on to its holdings for long term. And normally when it does sell, it does a fruit tree type sale where it only sells a small amount of their gains, and it still wants to keep like a good chunky allocation in the business. So WeChat is the foundation of Tencent. It has about estimated 1.3 billion active users. I believe the native term is WeSing. I'm probably butchering that. But as I mentioned, WeChat Pay, that's another fundamental part of that. Just as far as communication and fintech, it really is just like an engine in China. When people think about Tencent, I think the most worldwide and most visible recognition of their name and brand is in the gaming market. It is one of the largest gaming monopolies. I kind of fear that we're moving into a world where Microsoft is going to increasingly own like the western parts of the world as far as like the gaming medias, and that Tencent's going to own like the eastern world in the gaming medias. But I might do a whole video on that later. It has amongst the greatest track record for investing in the sector, especially with gaming. Tencent and the company and their investors, they've done like a phenomenal job throughout the years, and they've had some of the best management and the best track record. You consider their like return on investment, for example, in like Supercell or in Riot Games with League of Legends, it's incredible. The Tencent gaming emulator Game Loop is very popular, as well as you think about like Tencent Devs, they do games of their own. I'm gonna go on a bit. Chinese antitrust has been kind of a hassle on Tencent lately as far as like putting out games, but more on that in a bit. But yeah, Clash of Clans, you're looking at 76 million monthly users. League of Legends, you're looking at about 180 million monthly users. And then you got 350 million registered players in Fortnite Battle Royale for the year in 2022. So, there's a lot of people like playing these games that they own and have like significant ownership in. And I think that's what really like interests Tencent to me. It's like I really do believe that they are going to continue to. So these are some figures I borrowed from the Tai Chi Kang YouTube channel. I'm going to link that in the description. I think this slide just kind of breaks down really well the different apps that Tencent has and how they play into life, especially in China. I don't use a lot of these apps in like my world, but I understand their relevance based on a lot of the information that I've read about, and that's what makes me really interested in them. So it's pretty much like foundational for life. You have socialized communication, sharing, and then it breaks down into like larger parts of the world. So like seeking medical help, things like Tencent Health, and then work in collaboration. You got things like Tencent Docs. We'll go into Tencent Cloud here in a bit and how that's relevant. WeChat Pay, QQ, that's significant for like reading. Obviously music, we talked about like Tencent Music and things of that nature. QQ Music, playing games, Tencent Games, the Game Loop emulator. It's a very, very important, just Tencent, their businesses that they've done alone. I'm not even talking about their investments. Their own businesses are foundational to China. So as you can see here, as I said, the communication social, I believe that's like the biggest cog of the company. And although the most visible components like games and additional content, they're not as significant of a business because, as I said, I believe a lot of this is in things like WeChat Pay and WeChat and the active user base that they have. As you can see, Tencent Cloud is becoming a significant part. It's the number 2 service provider behind Alibaba Cloud. It could be tied with Huawei for all I know, but yeah, as you can see here, Alibaba Cloud does dominate the market, but Tencent Cloud is a very significant player in the cloud markets. If you want to understand the significance of this model, I would highly suggest you look at the cloud market model in the United States. For example, AWS is like the biggest player, but then you got something like Google Cloud, which is a significant player, and Microsoft Azure, which is also a significant player. So this is very reminiscent to me of the big tech cloud market that we have in the United States. And Tencent looks like a very legitimate player. In my impression, as far as like the cloud market, Alibaba seems to be dominating in the way that AWS is, and that's at the current time. That doesn't mean that it's going. Tencent to me kind of seems like it's in the position almost like something like Google Cloud is in, where it is a very significant chunky player in the cloud space, but it really does need to like develop itself a little bit more, and it has the technology. It has the technology and the resources to do so. So yeah, we'll follow Tencent Cloud very keenly as investors, see how it does throughout the years, but it's a very significant chunk of the market in China, and the fact that they have this is very significant because it's just another spawning mechanism of the business. When you own a company like Tencent or like Amazon or something of that nature, you want to think about that company as a spawner type business. Monish Pabrai has gone into this kind of like ideology, but essentially what it is you want the company to spawn sub businesses that can make revenue of them for themselves and become profitable themselves. And over time, as you accumulate many of these sub businesses, you become more and more profitable. And Tencent Cloud is just like another great part of those sub businesses. If it somehow just got outcompeted like tomorrow and it had to get deleted because it just was not going anywhere, Tencent would not go under. You're still talking about Tencent Games, digital advertising, fintech, social and communication, WeChat and WeChat Pay. So no, Tencent would not go under if the cloud went under, but the fact that they are willing to play in the cloud space and that they won this much of the market is... So yeah, as I said, I actually looked this up. They have a lot of other smaller investments that I hadn't talked about, but for example, they've put a couple $1 million into Discord a number of years ago, and other things of that nature. Obviously, none of these investments are as significant as the ones I mentioned, which are multi-billion investments like Tesla, Meituan, or some of those other ones on my chart. But the fact that they're willing to like scale up some of their capital in a very diverse portfolio of businesses, I think is really interesting. As I've said, a company like Discord is very interesting to me to be invested. Smaller not micro cap, but it's only it's maybe $1 to a couple $2 billion valuation in private space. Very legit business, has like a legit model, huge user base, room to scale up, room to go public, and scale up after IPO. So the fact they're in it now, I think, is awesome. But yeah, let's talk about like why is Tencent so cheap? This has been like $1 trillion company before. Why is it just now like sub 400 billion? What's up with that? That's a lot of like wealth evaporation really quickly. Why is this right now? Well, the China risk is more real than ever. By the China risk, essentially what I mean is China in a lot of other countries, especially certain powers in the West, they haven't particularly seen eye to eye on every single issue, and people make hypothetical situations about like a war with China and stuff like that nature. And the inventing something like that, having your capital tied up there is just not a pretty situation, and I think a lot of that is priced into the market because it is a risky situation. Obviously, what would be most ideal for Chinese investors would be that if there's any type of war that's fought, it's an economic war, and that all the nations of the world, including China, just arm the economy to the teeth as well as they can and try to outcompete each other in the economy. But that's that's like a Cold War. That's not even a war. That's just global capital. China's been in a growth slowdown, obviously ever since like the CV-19 and having to tackle their own issues, things of that nature, as well as I believe honestly they were just genuinely due for like a contraction in their economy just as a natural cadence kind of thing. You can look at like China, like post kind of like 2018, see that they've been in a huge boom, especially like 2020 through early 2021, just like a huge boom. So people seeing this growth slowdown, that's really just kind of like pulled back a lot of interest from stocks such as Tencent. When things like the economy overall slows in a multitude of sectors, things like online ads and gaming, the spending on those types of spaces really slows back as well. So it's almost like cyclical. You saw the same thing here in the United States when a stock such as like apps sold off APPS, or even a stock such as Google or Meta selling off. The reason why they sell off is the US economy was hit with a lot of bear sentiment in 2022 with the situation in Russia, Ukraine, as well as we were overdue for our own growth slowdown and our own natural cadence of a correction. So yeah, when things like that happen, that just really, it's a natural cadence to pull back on things such as like, you see less online advertisement spending, less spending on wants in the economy such as video games, consumer discretionary items. So Tencent, the Chinese antitrust has really been up Tencent's business, and that's created a situation where it pulls off a lot of investor interest from Tencent. Some things that has happened is the forced sale of JD for Tencent. Now I don't believe that they own JD today. They could have liquidated its entirety of its holding. They did have a good time for capital to appreciate, but it's still being forced to sell anything is not ideal, especially if you wanted to hold on to something. But yeah, just as I said, notice how Chinese antitrust asked them to sell their Chinese holdings such as JD. They didn't say anything about the international holding. If Tencent becomes more wealthy and more wealthy and more wealthy, especially via holding international assets, that only benefits China essentially. From economic superpower standpoint, if Tencent gets bigger, the People's Party of China, they're gonna be kind of content with that to a degree, especially if it's under their managed capitalism model they have in China. China operates a different kind of capitalism. It's like a capitalism with more regulation, a lot more regulation. Another thing is Tencent's only been able to release about 3 games in the past year. According to Chinese antitrust, they've kind of had a monopolized stranglehold on the market. So Chinese antitrust has been having a lot of their devs hold back unreleased ready to games because they would like for other developers in the market to kind of like get things to catch on and stuff of that nature. But as I said, it's a super managed capitalism. But if Tencent makes money, then China will make money. So at some point, China can't just suffocate Tencent with regulation. That's the theory, at least. I really would recommend you take a look at Charlie Munger, some of the YouTube videos of him talking about his thesis in China and what he sees for investment in China, and why he sees through a lot of those risks and kind of sees them as hullabaloo, and for a longer term, why they're going to be great prospects and great investments. So is the Tencent business model still alive through the wave of regulations that have come 2021, 2022 for Tencent? Is it still alive? Well, this is a tech writer out of China talking about how they made 260 investments in the first half of 2021, but compare that to the first half of 2022 where they only made 56. It's slowed down a lot since last year. Isn't it favorable to assume that that's due to uncertain business conditions, maybe more so than the regulations? Well, what I'm trying to say is like 2022 first half might have not been as attractive investment time to Tencent compared to the first half of 2020. So it's their money, they only chose to invest in 56 things in the first half of 2022. That was their choice. And 56, that's better than 0, right? That's my opinion. So what I'm trying to say though is no, I do not believe the regulators are suffocating Tencent. I believe that Tencent is still able to finagle their thing. I believe that their business model is staying alive. From 56 investments in 2022, in another bullish year where maybe Tencent feels more bullish about tech and things, that who's to say that number doesn't kick up closer to 300 again. So just keep in mind that Tencent does not appear to be blindly investing capital, and Tencent still appears to be very able-bodied on investing capital because they did take 56 positions. So one thing I do want to mention, I actually don't own any kind of Tencent, but I do own Prosus. I bought it around like this kind of like localized dip here. And I think if it does go around that localized dip, I think it's a great value opportunity. I'll kind of break down why. So essentially they own about 26% in Tencent. They used to own about 29%, but they sold a little bit to kind of like realize the value in their own company. And they bought back the stock. That's what they did. They bought back the stock. And it was a pretty good move because in a weird way, it increases the Prosus owner's position in Tencent because the Prosus shares were burned. I I hope that's not too hard to understand. But essentially, like when Prosus was like a $9 stock or something down here, I thought it was a great investment because Prosus was what, like a sub $100 billion market cap, but the actual holdings that it has of Tencent at that time was worth about 130 billion. I mean, this is a huge position. Like I said, Tencent was a 390 billion company. So if you consider they own 26% of this, you know, and this is a $130 billion market cap today, I mean, it pretty much accounts for the entire valuation of Prosus. And then you got to keep in mind that Prosus is kind of like a Tencent of its own. It's a tech conglomerate. So it has a lot of other businesses that you're buying into as well. The problem I think I have with Prosus is that it really doesn't have any other businesses that are proven in here and now. As I mentioned, around like $9, I think it was like $10. It was great. You know, I was kind of like dollar cost averaging into it all day around those prices. But around today's prices, I kind of think you might be better off sticking with like the ADRs of Tencent, or the I think ideally if you have the capital, you could go ahead and purchase the international ticker on the Hong Kong exchange 0700. You could do this via like interactive brokers, but it would take a lot more initial capital to go to interactive brokers, go through their fee structure, and get to a point where you're holding the Hong Kong shares. I'm not in love with the idea of buying some Tencent ADRs, although I thought about it, because if the China risk thesis played out, I feel like the first things to like delist or just get into a hullabaloo of me losing them first or losing that asset sooner than I'd like to, I feel like that would happen first thing on the OTC market, where TCHEY is, the Tencent ADR. I feel like that wouldn't happen. It possibly wouldn't happen at all, but it wouldn't happen not nearly as fast or as dangerously as it would with something like Prosus, who they are in the Netherlands and they own those shares of Tencent, or somewhere like owning the Hong Kong shares. But yeah, that is my presentation on Tencent, ladies and gentlemen. Thank you so much for tuning in. I am the Zoomer Value Investor. I hope you enjoyed this presentation. If you have any questions at all, please feel free to write a comment out, send me a message, anything of that nature. I'd love to get in touch with you. I just want to add, I'm really excited for this business. Again, I just look at the vast pool of things that they own that has time to compound for them in the future, as well as it's pretty easy to dream about, you know, what they might have in the works and what is coming through their pipeline. And I'm sure like Tencent themselves are, you know, as investors themselves, they're definitely doing that same thing where they're working really hard and just kind of like they have dreams of their own and they have like a vision of their own, how they see the world going. And they've been drastically correct so far. Very well placed investment. Spotify, Snapchat, Riot Games, you know, it's an impressive business for sure. So feel free to use this figure. I can send this to you if you'd like. And yeah, I hope this presentation gave you a better understanding of Tencent and the business. All right, thank you. Peace.